Wednesday, February 23rd, 2022. A lot happening, ladies and gentlemen. Before we start the show today, make sure to give this video a thumbs up. Share this video with everyone you know. Blast it all over your social media. If you have not subscribed to this channel, subscribe to this channel so that you get the latest, newest videos when they are dropped. But without further ado, so much happening. Markets rocked again today. Dow Jones down 464 points. S&P down nearly 80 points. NASDAQ down 344 points. Earlier in the day, the Dow was up 236 points. Did a reverse, closes down 464 points. And I think that there's no doubt a lot of fear taking place out there. A lot of fear of what's happening in Ukraine. But I think that that's not the real fear. I think that the real fear is that the Fed is going to crash the markets. And we keep hearing about what's happening in Ukraine and all this being blamed on what's happening in Eastern Europe. But again, is it really Eastern Europe, or is it that the Fed is beginning to pull the punch bowl away? Is it the markets realizing that rate hikes are coming beginning in March, and there's going to be multiple rate hikes? Some people saying 8 or 9, some saying 3 or 4. Whatever the case may be, the markets realize now that this is real, that rates are going up. Now, regarding gold, silver, and the markets, sooner or later, could happen tomorrow, could happen next week, maybe it won't happen at all. But if things do, or when they do settle down in Eastern Europe, of course, we're going to see the markets come back. We're going to see gold and silver come back down. But I think that that is going to be very short-lived if it does happen, because, again, there are bigger problems than what's happening in Eastern Europe. And these markets, in my opinion, are going to collapse no matter what happens in Eastern Europe. And they're going to collapse no matter what the Fed does. We have major underlying damage that has taken place in these markets, which has been caused by all of this reckless monetary policy, all of this QE, continued 0% interest rates. This has caused major problems on top of the $6, $7, $8 trillion that was injected into these markets, into this economy last year. And now we're seeing the repercussions with all this inflation. So the underlying damage is not fixable, ladies and gentlemen. No matter what happens in Eastern Europe, no matter what the Fed does or doesn't do, things are going to collapse. These markets are going to collapse. And we must realize at this point today that the economy is too sick to recovery. There is no recovery. There will be no recovery. This economy is collapsing every day. And these people who do not see what is happening to their economy, I don't know what to tell you. I mean, they really, really need professional help. And this isn't to be critical, but if you cannot see what's happening by now, if you don't see the debts, the deficits, the massive closures of retailers, restaurants, if you don't see the homeless crisis, if you don't see your paycheck buying less and less every time you go to the pump or the store, you live on a different planet. So many mistakes were made earlier by the Fed, and the Fed is continuing to make even more mistakes right now. Why has the Fed not raised rates yet? Why do they continue to procrastinate? Why are they waiting to raise rates? Not raising rates sooner and not raising them higher is going to be, I think, something that the Fed regrets down the road here. The depression's coming no matter what, ladies and gentlemen, and all they're doing is delaying this depression. And by delaying it, by not raising rates years ago, months ago, And now they're going to be, the first one's probably going to be 25 basis points because the markets are in shambles. And so now instead of 50 basis points, which isn't a whole lot, they're going to do 25 basis points more than likely. This is going to do absolutely nothing but delay the inevitable. And it's going to make things much worse. It's going to make this depression much worse. So they can delay it all they want, but the wheels have already fallen off. I want to get into a couple articles today. And look, be prepared for this. And like I said in the past, the first thing to prepare for what's coming is to admit that things have already begun to collapse, that things are collapsing right now. You must admit that there's a problem. You must be concerned. If you're not concerned, you don't take action. Once you get concerned, once you get a little scared or nervous, you begin to take action. And most of you have been taking action over the last couple of years. If you've taken zero action at this point, you better get going. So I want to switch gears a little bit here and go over a few articles with you. I saw this on the news yesterday. Sticker shock, gas climbs over $6 per gallon in Los Angeles. They showed a Chevron station in Los Angeles, a gallon of regular gasoline, $6.21. If you're filling up your gas tank, they were interviewing people in California here, and people saying, look, it's costing me $110 to fill up my 25-gallon tank. Another person said it's $150 to fill up their 30-gallon tank. If you're at this gas station in LA at $6.21 for regular, a 30-gallon tank, that'd be over $180. Those wage increases that everybody got went right to the gas tank. Again, people who got wage increases, minimum wage, $15 an hour out here, and it's all gone. You're making less money than ever because everything costs more, but $6.21 for a gallon of regular gas. Wolfstreet.com, is 4% the magic number for mortgage rates to prick the housing market and stocks? It's a good question. Right now, today, a 30-year fixed mortgage is 4.19%. And I think that this is going to begin to cause problems. What happens when the Fed's rate repression comes to an end, ladies and gentlemen? What's the magic number that pops the bubble? Is it 4.5%, 4.75, 5, 5.25? Comment down below. What's the magic number that is going to pop this bubble? The magic number in 2018 was 4.8%. The magic number in 2006 was 6%. The MBA's index for mortgage applications has now dropped by 28% from January of 2021. This article today, coming off the hedge, mortgage applications collapse most since March of 2020. Mortgage applications collapsed 13.1% week over week. The refinance index plunged 16% from the previous week and was 56% lower than the same week a year ago. What does this mean? What is this going to mean for the housing market? Comment down below. I don't think it's going to be good. As rates rise, the moderate income buyers, the first-time buyers, they're priced out because the line is so thin already. And you raise rates 0.25%, 0.5%, that's it. They're out, completely gone. This is really going to affect first-time buyers and moderate people with moderate incomes. This is going to be a big problem. And as rates continue to go up, it's going to price out people in the higher income brackets too. And remember, most of this country is living paycheck to paycheck. Most of this country's wages, savings, overhead is being eaten alive by inflation. Inflation, which I believe is going to continue to go up. Inflation, which I don't believe is 7.5%, neither do you. I believe it's 15%, 16, 17%. Some of you have been writing me saying it's probably 20%. Who could argue that? What does this mean for the housing market? This means that we're going to see less people applying for mortgages, mortgage applications, refis. It's going to be trouble. It's going to be really, really big trouble. But I believe that when we begin to break 4.5% on a 30-year, you're going to see very, very big trouble. And I believe, no doubt, that we're going to see mortgage rates break above 5% for 30-year. I really do. I don't even think that would be shocking, would it? It's still a low rate, but this is how fragile the system is. This is how fake this market really is, because when you look at a 30-year breaking 4%, and that's already causing trouble, 4, 5, 6%. I mean, this is like nothing. This is normal. These are 5 and 6%, 7%. This is normal for a 30-year. There's no normal here because the economy is so sick, and this is why it's not coming back. Cyber attack hits Ukrainian banks and government websites. Are you prepared for this to happen to your bank? Could it happen to a Wells Fargo, a Chase, a Bank of America? Could it happen to your bank? Yes, it could happen to your bank. Is your money safe in a bank? No, it is not. Me personally, I keep just enough to pay the bills. Definitely have my money and assets diversified in multiple locations. Don't keep all your eggs in one basket. Certainly don't keep all your money in the bank. Just imagine, it's very, very possible that we're going to see more of this taking place throughout the world, and it's just a matter of time. And we're going to wake up one day and we're going to find out that, some of our major banks have been shut down. How many? I mean, just go to my past video. Another Bank of America shut down, ATM shut down, boarded up with a piece of plywood. Is it really shocking to think that we're going to see cyber attacks shutting down our banking system? It's not a shock at all. It's going to happen. And anybody that believes that it can't happen and won't happen, again, I don't know what planet you live on, but this has been happening now for the past couple of years. It's just a matter of time before it just wipes out a big bank and you can't access your money. What do you do if your bank is shut down for 1 week, 2 weeks, 3 weeks? What are you going to do? Do you have marketable items? Do you have cash put away? Do you have an emergency plan? People always ask, what's the answer? What do I do? How about having a plan? How about getting in a mental mindset? Getting a plan that if the lights go out or the banks close, you're not going to starve to death, that you're going to be able to continue on your daily life to function, right? You're going to function daily. You'll be able to pay your bills. You'll be able to put gas in your car. You'll be able to feed your kids. You're not going to do that if you're relying on a piece of plastic and relying on digital money, right? So when you put that piece of plastic in that machine and money doesn't come out of it, you're going to be in big trouble, especially when your kids are hungry and they're screaming because I haven't eaten in 3 days. So why take the chance? I pray to God that never happens, but is it possible? It's beyond possible because it's happening right now. If they can do this to a government, they can certainly do this to your bank. The market has just adjusted its views on how the Federal Reserve will raise interest rates. We talked about this a little bit earlier, but because the market is pulling back because of what's happening in Eastern Europe, or it's pulling back because it realizes the punch bowl is being pulled back, expect 25 basis points. JP Morgan's chief economist, Bruce Kasman, said just last week he believes the Fed will hike at each of its 9 meetings. I don't think that's going to happen. But so what if they do? If these are 25 basis point moves and we have rates at 2, 2.25%, 2.5% at the end of the year, big deal. Inflation right now, their inflation is 7.5%, real inflation over 15%. What is 2 or 2.5% interest rates going to do? This is a spitball in the ocean, ladies and gentlemen. It's only going to make things worse, not better. They don't have the guts to get aggressive and fight inflation. They're too scared of what's going to happen, but it's inevitable what's going to happen. All they're going to do by these little 25 basis rate hikes is delay the inevitable. They're putting it off, and it's going to continue to make inflation rise. It's going to continue to get us closer to a depression, which is, in my opinion, already started, and it's going to make the depression much harder hitting and longer lasting. Economic injustice, 72%. This is on the Hedge today. 72% of triple P money went to the top 20% of earners in America. Small business devastated. Watch my past few videos. Go back to my past 2-3 videos and take a look at what is happening to small business. They did not get the bailout, but the top 20% of earners in America did, while these little mom and pop restaurants, retailers got decimated, no help, but the top 20% got all the help. I don't know about you, but it's everywhere, every city I go to, every town I go to, they all look the same, right? There's a Taco Bell, a McDonald's, a Starbucks, a Verizon store, a Costco, and a Walmart. Every city in America is beginning to look the same. All these corporate giants, right, that, continue to make record profits while the little small mom and poppers couldn't even get a triple P loan to keep the lights on and keep their business going. They're gone. And we're going to see many more small businesses vaporized this year. Sad to say, but that's the reality of it. So I'm going to leave it there today. Markets look absolutely sick. And now there's two problems. Eastern Europe and interest rates going up. Well, let's say a third problem, inflation. We got so many problems. There's so many problems. But Eastern Europe, interest rates going up, and inflation. And these are three big problems, and they don't have the answer. And this is why the inevitable is coming, and it's going to be the worst depression America has ever seen. Are you prepared? Will you be able to get through it? Will you be able to prosper through it? If you are getting rid of your debts, if you're putting cash away, putting some gold, some silver, if you're getting in a mindset, get your mind in better shape, your mind, you've got to be getting this ready. Mental mindset, ladies and gentlemen, and you need to be walking close to God, and you need to be getting in better physical shape. I'm not perfect. I could be in better physical shape, better spiritual shape, better mental shape. I'm trying. I'm heading in that direction, and that's all we can do is take our best foot forward and get into better physical shape, better spiritual shape, and better financial shape. Sitting on the couch and ignoring this, or believing it's going to go away, or hoping it's going to go away, you're going to lose. You will not stand a chance. You will be a debt slave. You will be a victim of this economic collapse. I don't want that to happen to you. I don't want it to happen to me. So this is why I'm taking a step in the right direction every day, trying to get in a little bit better shape, hitting the gym, saying my prayers and thanking God for everything I have, and getting in better spiritual shape, putting money away, buying gold, buying some silver, and just getting in the best financial shape that I can, and having paid off all my debts. So do the best that you can. Get ready, get prepared. God bless. Look forward to talking with all of you very, very soon.